Hey traders, Michael or 𝐿𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today's Hump Day, November 5th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we could start off simple. She's up 0.35% or $2.34, and she's hovering right above the 20-period moving average, this orange line. That is home base. So we're eating a little bit of time off the clock right in front of home base. But what's important to know is that we're still in a bull-bear battle place. Okay, this line right here represents the entrance to no man's land. We were talking about yesterday how we had a beautiful spike the low and rip it right back up trade at that number. And today, what did we do? We spiked yesterday's low and ripped it right back up. So just taking it at face value, we're still fighting this bull-bear battle. The entrance to no man's land. Closed yesterday below it, and now today we closed above it. We missed a gap up above. That number comes in at 683.34. That's some unfinished business towards the upside. That's going to be some overhead resistance if we get there. I would certainly write that number down on a sticky note, but all she's really doing right now is fighting that area. And the bulls are winning as of right now. Okay, things can easily change with the snap of the fingers leading up towards tomorrow, the end of the week. We only have 2 more trading days of the week. Not to mention today we have our tinfoil hat event. That's the supermoon, otherwise known as the beaver moon. So that could certainly move the market around a little. But just look how the market is treating that number. We kept spiking through it a little, but we always managed to fight back above it and stay above. We had a pretty nice rally going today, up until the end of the session. To the right of the vertical line represents today's activity. Here are 2 numbers that we were talking about earlier this week at 679.25 to 679.90. Those 2 numbers are important. As you can see, found support at those numbers and then utilized it as overhead resistance right here towards the upside. And now today, we spiked through it a little. We had another number up there. We'll get to that when we go over inside the numbers. But those 2 numbers can still be utilized as overhead resistance. And we're still closing candles below those 2 numbers. If we get above those 2 numbers and start closing candles above, then the market can certainly make her way back up to fill this gap right here at 683.34. But on the flip side, if we remain below these 2 numbers and close below them, then we have some more testing of the entrance to no man's land at around 675.65. And if we start to sweep these lows and close below the entrance to no man's land, then right here you have a gap that needs to be filled at 671.63. We have some important numbers in and around that area. Inside the numbers and live room members will certainly have those numbers ready. But that's pretty much the situation as to what's going on. Market keeps testing the entrance to no man's land at 675.65 and still continuing to find overhead resistance at these 2 numbers. If Mrs. Market loses the bull-bear battle, then there's no reason why we can't touch the 20-period moving average and go ahead and fill this gap right here. That's an important area for the market. It's magnetic. We've been talking about it for a while now. Reason number 1, you have a gap right here. Reason number 2, you got the 20-period moving average. Reason number 3, near that area is a recent breakout area, coinciding with a big-time breakdown candle high. That can be utilized as support on the way back down. Again, inside the numbers and live room members will have those numbers ready. How about a little lazy swing trader intermission break? We had not 1, not 2, but 3 profit target alerts today in the lazy swing trader. We're off to a great start in November. Not to mention, we had a 100% win rate last month. And in August, we had a first entry alert at $94. As you can see, we were hanging around that number, took a little bit of a dip down, and then went right back up and gave us profit target alert number 1. Okay, these are swing trades. They're not supposed to work the second after, the minute after, even the same day. You gotta give these trades some time to work. But I'll tell you what, this trade worked out pretty much right off the bat. The enter date was November 4th, yesterday, and today was the first profit target. How you doing in the lazy swing trader? Already locking in the risk-free, emotionless trade. How about another profit target in SLG? We had the entry alert at 49.63. What was the low right here? 49.62. Spiked it by 1 penny and bounced right back in the other direction. Came back down, used that number as support again and again until we finally hit profit target number 1 at 51.61. Don't you think that was a pretty good exit? How does the lazy swing trader system know? If you took SLG, UAL, or the next one that I'm about to show you, leave a comment down below and help a brother out. Let others know how you're using this system to make money. We literally hand you the trades on a silver platter. All you have to do is execute. That's it. With an 87% win rate this year. And honestly, at this point, I think it's even more than that. I think it's at 89% to be exact. Last but not least, we had our second profit target alert for NUE, Nucor Corporation. We locked in a 4.8% gain. That was a short entry alert at 152.35. As you can see, spiked it by a little bit, but pretty much right on the money. And this is starting to turn out to be a nice trade. We even have EMAD locking in profits for NUE, 12.50. How do you like dem apples, EMAD? Much appreciated for the email and nice work. Did we have any trades in Inside the Numbers and the live room? Well, the short answer is, hell yeah, we did. Today was a perfect example of why we exercise patience and wait for what we want in the market. And it's also so crucial that you have a game plan and you know what's going on in the market, where it's heading to, what the numbers are up above, down below. That's pretty much a no-brainer when it comes to trading, but you'd be surprised on how many people go in without a game plan, without the numbers. So let's go take a look at Inside the Numbers, starting with the 0 dark 30 notes. This is the morning game plan that's laid out to members well before the opening bell. So there's a lot of notes this morning, but the main area I want you to focus in on is right here. The next area of overhead resistance is at 677.25 to 678.05. Creating an overhead resistance zone. How you doing? Right at the vertical line is today's activity. We got the two numbers on the board. As you can see, we hit the first number, spiked it by a little bit, almost got to the midpoint of the two numbers, and then came right back down, and did indeed provide you the bare minimum base hit. A base hit is 50 to 70 SPY cents, or 5 to 7 ES points. We lock in the base hit, base hits put you in the Hall of Fame, and then we put our stop to break even, making it a risk-free, emotionless trade. We hold trailers for the never know, and if it comes back up and grabs our stop, so be it. Why? Because there's always another opportunity around the corner. And no one ever went broke taking a profit. So then as you can see, we did come back up, went right up to overhead resistance number 2. So that could have been one of those other opportunities I was just talking about. Look at the high right here. The exact high is 678.09. Spiked it by 4 pennies. Came right back down to the 677.25 numbers, so it could have certainly been some more profit taking, and that was another opportunity on the board. And as you can see, those two numbers were certainly important. We were playing ping pong back and forth those two numbers. This is what I was talking about when I say patience pays. Okay, at 9:05, we were hanging around another overhead resistance number that was at 675.65, and then obviously I mentioned that zone we just went over right after. But then at 9:25, I said 675.65 can be a trader's choice. It's still a bull-bear battle at that area, so it could really go in either direction. I'm gonna wait for the market to open up a bit. If we get to the first overhead resistance zone at those two numbers, I would be interested in a short. Scrolling up a bit, we can see 953 coming into that front end number, showtime, looking for a base hit, and then at 10:01, there's your base hit. Holding the trailer is fine, just don't let the remaining portion go bad on you. This is all real-time updates in Inside the Numbers. And obviously in the live room, we're going over this in super real time, where traders trade by our side each and every single day. We hold your hand throughout the entire process. It's real live guidance with real live trades. But that wasn't the only trade that we had today in Inside the Numbers and the live room. We can never forget about stocks on the move. Today we had 5 in total. 2 of them hit their entry targets. We had pins and HUM. HUM is actually an active swing trade on the board. It had earnings today, so it was down a little bit. We're still up overall in the trade, already locking in our risk-free, emotionless trade in that matter. But let's go take a look at these two stocks on the move and see how they played out. So we got Humana HUM on the board. We got entry number 2 at 259.31. We opened below entry number 1, so we're not going to look at that. But entry number 2, the first 5-minute candle, the low is 258.16. Spiked it by a tad and then ripped it right back up to a high of 264.33. That's a nice little trade to start off the day for people who took Humana. Came back down, we don't let the trade go bad on us, and we'll call it a day. Get in and get out. That's pretty much the basis of stocks on the move. Then we got Pinterest on the board. This wasn't a trade that we were taking. This is later on in the afternoon. Didn't hit entry number 1 until 3:35, but it just goes to show you that the numbers do indeed work. We'll give that a little funny how that works. If you took any of these trades, the spiders, Humana, IWM, whatever it is, please leave a comment down below. I'd love to know. And I'm sure other people would love to know how you're doing with the numbers. You could pause the video, read the notes, and go back to the chart to double check the work. Everything's in here from you, from the morning game plan, the morning numbers, the intraday updates. We have the afternoon write-up so you know exactly where the market's going to go to, what the numbers are up above and down below. Literally everything that you need to be a successful trader. And then not to mention, we have a list of 13 different markets with support and resistance numbers. How about a trade in Tesla? Right at the vertical line was today's activity. We had the support number at 44125, and that happened to be low of day. The exact low is 440.71. We'll give that a how do you like dem apples. What about an overhead resistance number in crude oil? We had resistance number 4 at 60.85. Today's high was 60.84. Came up 1 penny short. Well, we can't split hairs over pennies. We'll give that a close enough, and we'll give that the numbers work. We have plenty of opportunities around the corner for everybody, with inside the numbers and the live room. Let's go take a quick trip around the world and look at some of the other markets, starting with 𝐶IWM, my number one favorite market leading indicator. We went right up to the 20 period moving average. That is home base. Okay, we came up a little bit short, closing below it, but capital BUT closing above that 244.30 number. Those two numbers that you see on the screen are certainly important. Closing above those two numbers is the bull case scenario, but getting below and staying below will open the door to another leg lower. Right now, 𝐶IWM is doing okay. We went ahead and completed this gap up above. I'm not going to get it exactly right, but it's around 245.40. So we did complete that unfinished business up above, and now it's really just a matter of if 𝐶IWM wants to stay above that 244.30 number and try to recapture the 20 period moving average, therefore reestablishing price above all the moving averages. Therefore, the trend is indeed your friend. But just taking a look at this on a weekly chart perspective, we are super duper extended from home base. Just flip-flopping back and forth, we can see that we've been eating some time off the clock at around that 247.18 number and 244.30 number, waiting for the 20 period weekly moving average to creep right back up to price. Okay, markets don't like to be too extended from home base. So we either go down to grab the 20 period moving average. That doesn't look like that's going to happen anytime soon. Not until we get below and stay below that 244.30 number, possibly. But the other side to it is we could just keep eating time off the clock at around that area, waiting for home base to creep back up. On the other hand, what about the transportation department? My number 2 favorite market leading indicator. We were talking about that trend line, this downwards trend line right here. We kept using it as overhead resistance, but today we're up 1.01% and we finally got above that trend line and closed candles above. So that is some bullish behavior. We've reestablished price above all the moving averages, and the next destination really becomes the high of this breakdown candle. That's going to be some overhead resistance. It's also a big fat semi-round number at around 16,500, give or take. But just because we're above that trend line doesn't mean we can't come back down, retest more of these moving averages near the pivot, and even retest the pivot. Because we've seen over and over again that the transportation department doesn't like to be too far away from the pivot. I was on a weekly chart, so let's go over and take a look at a daily chart. We can obviously see that trend line being utilized as overhead resistance. We do have another breakdown candle high right here, and some unfinished business that's this gap right here. So we could really call this area a zone of overhead resistance. And I'm expecting it to be a place where the market shouldn't just waltz right through. We'll see if the transportation department breaks down below the trend line, maybe makes another move towards the pivot again, or if we could start to utilize that trend line as support on the way back down. We'll keep an eye out in the transportation department. What do we got going on in the financials? XLF. Well, we're up 0.34% today. Been kind of just eating time off the clock at around this area right here. Below 3 out of the 4 moving averages on a daily chart. We did manage to fight back towards the 20, pretty much closed right on it today. Made an attempt of the 100 period moving average, that's this purple line right here, closed below it. But what instantly jumps out at me for XLF is this trend line we have forming. Tried making it the best that I could, but that is overhead resistance, as you can see. So we do have some unfinished business up above. That's this gap right here at 52.99, call it 53. We did come up short last week on Thursday, came up a little bit short today, so that does declare it as some unfinished business up above. Until we recapture that trend line and close candles above it, we're in a little bit of a bearish situation for the financials, and can eventually make its way down to the last line of defense, the 200 period moving average. But I do want to clear up some noise and take a look at the weekly chart, because although we are below 3 out of the 4 moving averages on the daily chart, we're only below home base. on a weekly time frame. So in reality, there's nothing wrong with the chart. Okay, we're just going back to test home base and pretty much eating some time off the clock around home base. Last week, we closed below it. This week, we're currently below it. We'll see if anything changes. We got Thursday and Friday to go before the week ends. But the more time we spend down below the 20-period moving average, you also have this most recent breakup candle low. If we get below that, then the next destination is going to be towards this 50-period moving average. And you also have another big time breakup candle low at around 49.84. But we'll call that a give or take number at 50, because that's a big fat round number. It's an important magnetic number for XLF, the financials. But long story short, there's nothing wrong with the chart on a larger time frame, the more dominant time frames. Therefore, there's nothing wrong with the overall structure of the market. It's pretty much just toying around with home base until something changes, until we possibly get back above that trend line. What about the Q people? We're up 0.65% today. We almost completed that gap down below that we were talking about the other day. We'll zoom in a bit. We can see came up a little bit short. The exact number, and I just had to adjust this, it was a couple cents off, but it comes in at 617.10. Today's low is 617.21. Came up 11 cents short. So that can be constituted as some unfinished business. Maybe she'll go ahead and complete it tomorrow, maybe even a spike through and get to the 20-period moving average down below. Or we have another gap down below at 610.58. This gap right here coinciding with a breakdown candle high that is a recent breakout area, and it's a spike of the 20-period moving average. That is certainly an important place for the market. We'll see what happens when the time comes, but I'm expecting this to be at least a balanced place in an intraday perspective for the Qs and the spiders. It's pretty much the same exact setup. Up above, we have this gap right here that comes in at 632.08. That's going to be some overhead resistance, and that's also a place where the market shouldn't just waltz right through. Keep it simple, that's what we got for the Qs. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're up 1.91%. We almost completed that gap up above. That exact number comes in at 366.10, came up a little bit short. That is some unfinished business towards the upside now. And this is overhead resistance. I'm expecting it to be a place where the market shouldn't just waltz right through as well. And we're just hovering over the 20-period moving average. What's interesting, kind of similar situation to the Qs, is that we did not fill that gap. We came up short again. The gap comes in at 351.14, just a little above the 20-period moving average. And it happens to be in the area of a recent breakout area. So it's kind of interesting how the Qs and SMH came up a little bit short of filling their gaps. So if we come back down, are we either going to have a little spike low, possibly rip it back up in the other direction? That would be some very bullish behavior. Or are we going to fill the gap down below that comes in at around 344.80? We can certainly head to that number, especially if we start getting below this low right here. Literally right on the 20-period moving average. So there is some interesting stuff brewing up for SMH, the Qs, the spiders, pretty much all around the board. I think this week is going to be a very important close because, as we know, the close is the most important thing that we can gather from that day or week. So as of right now, we're obviously still in a very bullish position in SMH, the spiders, pretty much all around the board. But we do have to keep in the back of our minds that anything can change with the snap of the fingers. We have the tinfoil hat event today. That was the supermoon. And as we know, not every time, but many times the market likes to take a little bit of a turn after these events. Doesn't have to be the minute after, the day after, the next day after, but it can certainly bring some more movement and activity within the market. A little change of character. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐿𝑰𝐿𝐼. Please don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. If you made some money today, leave a comment down below. Let others know how well the numbers work. With that said, we'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.